Now let's discuss the software tools that you're going to need to get started, and also the services that you're going to be providing, as well as how to price your services, the pricing for your services. So we're working in a digital age now, so it's recommended that you use a cloud software. A cloud software is a software that is an accounting software and payroll software that you can use online, so you don't need to install. That helps you to collaborate with the business owner. So whatever you are doing on your computer or on your cell phone or any digital device, your business owner is able to access that information as well. So when you've recorded the transactions, they're able to see the reports in real time. So when you've recorded the invoices and you recorded the payments that are done, then the business owner is able to pull the statements and see which customers have not paid, which customers have paid, and they're also able to see the balances and able to see that you've reconciled the bank statements. So you're going to need one of the three softwares, and I'm going to tell you which one I recommend, which is in the middle. Is either use Xero. Xero is popular. It's an international software that is recognized globally, and you can use as well in South Africa. Some clients prefer it. And you can use Sage Accounting. Sage Accounting is popularly known, and also it's a subscription-based software, which I recommend because I have experience in using it, and it's also user-friendly in terms of how to process, and in terms of no one needs training. Everyone needs minimal training on Sage Accounting. It's easy for you to get started, and I also have a playlist that I've created as well to use Sage Accounting. Let me take you through how to sign up on Sage Accounting, which is the software that I recommend. QuickBooks is also an international software, so it's important for you to know all these three softwares, because if you are going to be expanding your freelance services, some international clients prefer other softwares than Sage Accounting. But if you are going to be focusing on the local clients, I'll recommend that you put them on Sage Accounting. It's easy for you as well to collaborate with so many businesses that are using Sage Accounting. This is how you're going to be logging into Sage Accounting to sign up. You can sign up on a 30-day trial to get started and test the system if you've never worked on it. That 30-day trial, you don't need to pay. It is a subscription program that you are going to be paying on a monthly basis, but you can get started on Sage Accounting without paying anything for 30 days. So this is how you're going to sign up. Just follow along the video. Going to sign up on Sage Accounting, and then you're going to log in, create your company, set up your company, and test it. So for every company that you are going to onboard into your bookkeeping services as a business, you are going to load it on Sage Accounting. It can sit on one profile, or each business owner can have its own Sage Accounting, and they can invite you to come and work on their books on their site as well. So this is how you're going to sign up every customer that comes in to inquire about your bookkeeping services. I would recommend that you start them on a software immediately, because you don't recommend anything manually, because everything is on a software. Start them on cloud software. Start them on a Sage Accounting immediately. They have to get used to paying the subscription. They have to get used to actually working on a system that is going to make things easier. Do not start on Excel. Do not start on a manual capture, because that is going to frustrate you, and that's not going to be efficient. We need to make sure you gain as much experience as you can as soon as possible. Now that you understand how to sign up on Sage Accounting, these are the services that you are going to be doing on Sage Accounting: recording customer and supply invoices, managing those. And if, for example, a customer invoice is coming in a template that is specific to the accountant, or that is specific to the business owner, you can actually process that invoice on Sage Accounting, not as a document but as a journal, then you can attach the original document in there. So go check out how to process invoices on Sage Accounting without processing them as a document. I have the video loaded, and then you can actually attach the original document, original source documents. That means you don't have to have those documents loaded on your particular storage or any additional storage. You can have them and access them on Sage Accounting. And if someone is inquiring about that line on your journals, they're asking, what is this invoice? Why is it so, why is this amount? They can actually go into that line document, and then they can click on there. They can see the source document that you have. And also the bank processing as well. Any receipts that you need to upload, someone has paid something in showing on the bank statement, but you want the original receipt in there, then you can go into that line of the bank transactions. I have this series on how to process on Sage Accounting and how to add the original documentation. So go check out that on Sage Accounting. Then you can link that original source document into that transaction. Then that helps you with that documentation. If anyone wants to audit that transaction, then you're able to have the source receipt that you can link into the transaction. Then the management reports are going to come through, and those management reports, they are going to show how the company is performing, what are the sales, and how that shows into your financial statements. I'm going to show you how it's going to, a snippet of what those management reports are going to look like. Those are the services that you are going to be providing in a nutshell. So moving on to how to price your services, which is actually can be quite tricky for other people. They don't know exactly how to price the services that they have. We're going to use four models that you can choose from. You can use four models that you can choose from in terms of pricing. Let's go through the pricing models. You can use hourly pricing, value-based pricing, monthly retainer or fixed monthly income, monthly fee, per transaction volume-based pricing. So let me tell you how that works. Let's talk about hourly pricing. Hourly pricing, you can charge based on the hours. That is an outdated model of pricing because 350, you can charge from 350 to 700 rands per hour. This essentially means how much time are you putting in to processing those transactions. It's tricky because if you're a beginner, you could take more time, and this is going to be less valuable for someone who's more experienced in terms of processing. They're not going to understand how you quantified and spend so many hours into processing. But then you can do the hourly basis. It is an outdated pricing model, but you can try it. You can range from 350, which is the base pricing, and then 700, which tends to be the higher end of someone who's more experienced. Value-based pricing, it is the pricing that you do based on the value that you've provided. You assign value. So this is helping clients organize their finances, organize everything, so you assign the value based on it. Value-based pricing can work on projects that come in. For example, they come in with all this work, but then they're not going to be with you for a long period. So you can assign value-based pricing on that. How much value have you provided for this? So from that, you can have a package, like for example, 3,500 to process for the entire year. That's a lower end of pricing. That's a lower end. No one has gone below 3,500 for a year. That means month to month, and also the volume of transactions that you have to also have to consider as well when you are processing the year. And then that can range from 10.5 to higher ends of 30,000 by saying, all right, for every year that I'm processing, I am charging you this amount. So that means you're going to break it down from month 1 to month 12. So whatever you are charging, let's say 3,500 times 12 for 1 month, which depends on also the revenue and the volume of transactions that the person is going to present to you for you to process on a monthly basis. So you consider that. You consider also the revenue. So someone who's made revenue of 100,000, for example, for the entire year, it's not practical for you to charge them 3,500 for each and every month, because so that will work out to 42,000 rands. So if you're gonna look at, if someone has made 100,000 rands, you cannot charge 42% of their revenue. It's not practical. So look at that as well. Look at the revenue that they have. And also, you can charge a monthly retainer, which is a monthly fixed income. This is now when you've built a relationship with customers. You've created the value. Now you have built a relationship. They understand why you need to be a part of their business, but you're not employed by them. That's the nice part now, because it actually helps you and them. Because now an employee will require a salary on a specific date, regardless of whether income is being paid or not. But when I started, you work with the business owners, they'll tell you sometimes that they have not gotten their payments from their customers. So you're able to have that relationship to say, I'm going to still push the work even though I'm not getting payment for my invoices, because you're freelancing. This is a business. You can push the work and you can have your terms and conditions that I can push the work for, I can get for 60 days, for example. So it's okay for you not to pay me in current month. It's okay for you not to pay me in 30 days. But then in 60 days, I'm going to need you to make a payment, and maybe we can put your work on hold until you are able to catch up with those payments. You don't want the business owner to actually sit long with your invoice unpaid, because that's going to accumulate a lot of money. Where they come in now, they feel like it's actually not valuable for them to pay you 30,000, because you've accumulated so many months that they have not been paying you. So it's okay for you to actually make a stop at a particular place and say, all right, I am going to stop here until then I get money for my services. So that is a monthly retainer, where you've built the relationship. Per transaction, volume based pricing, I think that works as well into the value based pricing. But then per transaction, that is it's difficult for you to quantify, because you're gonna look at the bank statements, the transactions that are on the bank statements. Then you're going to look at the transactions that are on invoices. And then to actually narrow it down, you're not building a relationship with this one. Because to actually say, I'm going to process up to 50 transactions, it becomes too transactional. And I would prefer that we go with the value-based pricing and the monthly retainer pricing. Those are the pricings that I do recommend, that I also use. Value-based pricing is looking at what I can put in for as much as possible, extract the value. You as a business owner extract that value from me, and I extract the monetary value, compensation value from you. And also the monthly retainer is essentially where you want to end up, where we have these clients as our clients and we are getting monthly retainers from them. So those are the two pricing models that I use and I implement in my business, and which I recommend.